Hello, everyone. Welcome to the market opening bell on Tuesday, May 6th. The Hong Kong stock market started May strongly. The Hang Seng Index hit the high of 22,533 last Friday, the first trading day of May, closing at 22,505, up 386 points or 1.7%. The Hang Seng China Enterprises Index rose 155 points or 1.9%, closing at 8,230. 31. The Hang Seng Tech Index gained 157 points or 3.1%, closing at 5,244. Mainland China began its May Day Golden Week holiday with southbound trading resuming today. Without northbound trading, turnover shrank to 133.7 billion Hong Kong dollars. For the week, HSI and HSCEI rose for three consecutive weeks, up 2.4% and 1.9% respectively. The tech index rose for 2 weeks with a weekly gain of 5.2%. Xiaomi surged 6.3% to 53.1 Hong Kong dollars, nearing its March share placement price of 53.25 Hong Kong dollars when it raised 42.5 billion dollars by placing 800 million shares. Last week, Xiaomi released its first reasoning large model, Xiaomi MiMo. With only 7 billion parameters, it outperformed OpenAI's O1 Mini and Alibaba Quan's 32B preview in math reasoning and coding competitions. The next catalyst for Xiaomi is the YU7 SUV, expected to debut in June or July with immediate deliveries. Reports suggest Xiaomi's Beijing factory is ready with sufficient capacity. Technical analysis. The HSI broke through the short-term range of 21,800 to 22,300, partially filling the April 7 gap between 22,638 to and 21,048 with only 105 points left to close it fully. If the rebound reaches 0.618 of the down wave, the target is 22,730. If the 9-day relative strength index continues to strengthen, it could test the 50-day moving average at 22,810. Breaking and holding above the 50-day line could target 23,000 with support at 22,200. US stocks maintained gains last Friday with the Dow and S&P 500 rising for the ninth consecutive day. The S&P 500 posted its longest winning streak in 20 years, erasing losses since Trump's April 2nd tariff announcement. For the week, the Dow rose 3%, the S&P 500 gained 2.9%, and the Nasdaq climbed 3.4%. Apple fell 3.7% after at least two downgrades post-earnings. Amazon's Q1 cloud revenue growth and operating income forecast missed expectations, and co-founder Bezos announced plans to sell up to 25 million shares worth $4.8 billion over 13 months, leading to a soft stock performance. Tesla European sales continue to drop sharply, marking four consecutive months of decline, though its stock rose 2.3%. On Monday, US stocks fell with the major indexes opening lower. The Dow briefly turned positive but ended under pressure, down 98 points or 0.2% at 41,218, alongside the S&P 500, which fell 36 points or 0.6% to 5,650, ending their 9-day streaks. The Nasdaq dropped 133 points or 0.7% to 17,844. The China-focused Golden Dragon Index fell 2 points to 7,169. Trump's statement about no plans to meet with China dampened market sentiment. The Magnificent Seven had mixed results. Apple dropped 3.2% after accusations of criminal contempt in the Epic Games case for not complying with the judge's orders, though it plans to appeal. Apple also rolled out Apple Intelligence in China with the iOS 18.6 update. Amazon fell about 2% and Tesla dropped 2.4%, both hit by tariff concerns. Oil prices fell, pressuring energy stocks. ExxonMobil and Chevron dropped over 2%, while Buffett's Occidental Petroleum fell 4%. OPEC Plus agreed on Saturday to increase production by 411,000 barrels per day in June, the second consecutive month of hikes, to penalize quota-violating members like Kazakhstan and Iraq. OPEC Plus originally planned to gradually unwind cuts from April, adding 137,000 barrels per day monthly over 18 months. Saturday's decision means nearly half the 2.2 million barrels per day cut will be restored in 3 months. Saudi Arabia warned overproducing members to improve compliance or face further supply increases. On economic data, last Friday's April non-farm payrolls added 177,000 jobs, above the expected 135,000 but below the revised 185,000 prior. The unemployment rate held at 4.2%, meeting expectations. March factory orders rose 4.3% month-on-month, below the expected 4.5%, with February revised to 0.5%. March durable goods orders were flat as expected. Monday's ISM Services PMI jumped to 51.6 in April, from a 9-month low of 50.8, beating the expected 50.6. However, S&P Global's PMI showed the U.S. composite output falling to 50.6 in April from 53.5, the lowest since September 2023, below the preliminary 51.2. The Services Activity Index dropped to 50.8 from 54.4, the lowest since November 2023, below the preliminary 51.4. This week's focus: the U.S. Federal Reserve's May policy meeting is on Tuesday and Wednesday. Central banks in the UK, Sweden, Brazil, and Norway will also announce rate decisions. U.S.-China tariff talks remain critical. China's trade balance data this week may reflect Trump's tariff impact, and inflation data, including April's CPI and PPI, will be released on Saturday. Our stock pick today is Horizon Robotics, stock code 9660. Horizon Robotics, a leading provider of advanced driver assistance systems (ADAS) and high-level autonomous driving (AD) solutions for passenger vehicles, holds over 40% market share in China's OEM ADAS market, reflecting the expanding application of its ADAS solutions. Amid the accelerating adoption of high-level autonomous driving, the group ranks second among China's independent third-party high-level AD solution providers, with a steadily increasing market share. In 2024, it achieved record-breaking delivery volumes and vehicle model designations, with approximately 2.9 million product solution units delivered and a cumulative delivery total of about 7.7 million units. In 2024, the group secured designations for over 100 vehicle models, bringing its cumulative total to over 310 models by December 31, 2024. Last year, the group established a strategic partnership with a leading global Tier 1 supplier for the design of its next-generation Horizon Mono, marking a critical step toward globalization. Additionally, the group launched its next-generation full-scenario high-level autonomous driving solution, Horizon SuperDrive (HSD). As a breakthrough innovation, HSD is designed to deliver smooth and human-like high-level autonomous driving capabilities across all urban, highway, and parking scenarios. By the end of 2024, the group collaborated with over 20 OEM brands to promote its solutions, including leading Chinese OEMs, global automotive giants, top electric vehicle brands, and their joint ventures. In February 2025, the group began production of its Gen 6 processing hardware, designed to power its ADAS and high-level AD solutions. The intelligent driving solutions driven by the Gen 6 series have gained widespread market recognition since their launch. For the year ended December 31st, 2024, the group recorded revenue of 2.383 billion yuan, up 53.6% year-on-year. Of its licensing and service revenue was 1.647 billion yuan, up 70.9%, and gross profit was 1.841 billion yuan, up 68.3%. Meanwhile, the group steadily improved R&D and operational efficiency, narrowing its adjusted operating loss by 191 million yuan compared to the previous year. Looking ahead to 2025, the cumulative shipment of the Gen series processing hardware is expected to exceed 10 million units, making Horizon Robotics the first Chinese autonomous driving technology company to reach this milestone. The group anticipates further enhancing HSD's performance to handle more complex driving scenarios, deliver human-like driving experiences, generalize across scenarios, and achieve seamless nationwide deployment. It is understood that HSD has been designated for integration into strategic models by multiple leading OEM brands, with mass production expected to begin in Q3 2025. Recommended buy price 7.1 Hong Kong dollars, target price $8, stop loss $6.7. I do not hold the above stock.